Well, I think specifically Spain, sitting in London, has been quite an amazing story, actually. I mean, a friend of mine who'll be named Jose, who sits in Madrid, said to me, he's been waiting for the market to recover for 5 years. He went for lunch, he came back, and he missed it. And I can understand what you saw, and I think it was American driven, was effectively the American opportunistic funds, which are not just the distressed real estate funds, but obviously the bond funds as well, played Ireland very well. They got the macro story right in Ireland, and Ireland's re-rated from a capital position and an underlying real estate rental position. They then swarmed down to Spain probably about 18 months ago, and there is this wall of equity, there is no doubt. And look at the 4 black box IPO placings that have been done in Spain. Incredible to me that you could raise €1.5 billion of equity, in an IPO. So it's completely re-rated. So there's been a major capital re-rating in yields in Spain, but the huge question mark is the underlying economic position. Debt to GDP, unemployment. We've now got interest rates in the Eurozone at 5 basis points. We have negative interest rates and a carry trade in Germany and France. Things economically are still not looking very bright. So are these people right? They were right in Ireland, but are they going to be right in Spain? I think then people are migrating from Spain to Italy because some of the American opportunistic players think Spain is done, so we're off to Italy. We're also looking at Portugal, but Portugal, no offence to João, is obviously a smaller market than the other two, but is still nevertheless interesting and attractive. And I think a note of optimism at the end is that we're mostly looking after retail property, some office and some logistics in these 3 countries, but definitely we are seeing green shoots of recovery in retail spending in Spain and Portugal. We are seeing it.